Coach Wade here, and today we need to talk about something that confuses a lot of people the moment they get excited about extra money, bonuses, and taxes. Because nothing will hump you faster than hearing your boss say, "Congratulations, here's the bonus," then opening your paycheck and realizing Uncle Sam already helped himself before the money even hit your account. You thought you were getting $1,000. Then the check lands looking more like $700-something. Now you're staring at your pay stub wondering if the payroll department robbed you in broad daylight. This is exactly why financial literacy matters. Inside the Power Team system, we teach people to stop reacting emotionally to money and start understanding how money actually works. Because when you understand the system, you stop panicking every time taxes show up. Now let's clear something up right away. A lot of people believe bonuses are taxed at a higher rate than regular income. Technically, not exactly. What usually happens is bonuses are withheld differently, which makes it feel like they're taxed harder. And there's a major difference between tax withholding and actual taxes owed. See, when your employer gives you a bonus, the IRS classifies it as supplemental income. That means employers often withhold taxes using a flat percentage method instead of your normal paycheck calculation. And for the most bonuses, under $1 million, the federal withholding rate is 22%. Then you add Social Security and Medicare taxes on top of that. So before you even touch the money, a decent chunk disappears immediately. That's why people get shocked. But here's the important thing. That withholding is not necessarily your final tax bill. It's just an estimate. When you actually file your taxes, everything gets balanced out based on your total annual income and tax bracket. So if too much was withheld, you may get some back. If not enough was withheld, you may owe more later. That's why understanding withholding matters so much. Now, there's actually two main ways employers handle bonus taxes. The first is the percentage method. This is the easy button for payroll departments. They simply withhold a flat 22% federally from the bonus and move on with the file. Simple, fast, predictable. Most employers use this method because it's straightforward. The second method is called the aggregate method. Now, this one sounds fancy, but all it really is it means the employer combines your bonuses with your normal paycheck and calculates taxes together based on your regular withholding setup. Depending on your income level, this could mean more or less money comes out up front. And this is when people really get confused about tax brackets. Inside the Power Team philosophy, we spend a lot of time teaching people how tax brackets actually work because social media has created a lot of misinformation around taxes. People hear 22% tax bracket and think every dollar they earn gets taxed at 22%. That's not how it works. America uses a progressive tax system. That means different layers of your income are taxed at different rates. So a portion of your money may be taxed at 10%, some at 12%, some at 22%, and so on. That's why your effective tax rate is often lower than your top tax bracket. And understanding that removes a lot of fear around earning more money, because some people are actually afraid of bonuses or raises because they think the taxes will eat it all up. No, you still make more money. Always remember that. Now let's talk a strategy for a second, because this is where financially aware people separate themselves from financially reactive people. If you already know a big bonus is coming, you can prepare intelligently. And this matters because bonuses can sometimes push portions of your income into a higher tax bracket. Now, before anybody panics, remember, only the income above the threshold gets taxed at the higher rate, not your entire income. But still, strategic planning matters. For example, one smart move for people who are financially stable is increasing retirement contributions. Traditional 401k contributions lower taxable income. So if you're already, out of debt, have your emergency fund in place, and you're focused on building wealth, using part of a bonus to invest can help reduce taxes while strengthening your future. That's a win-win. Health saving accounts can also help reduce taxable income if you qualify. And for business owners and entrepreneurs inside the Power Team system, this becomes even more important because tax strategy becomes part of wealth strategy. Now listen carefully, because this part matters. You do not make financial decisions only for tax breaks. I see people do this all the time. They spend money recklessly, just chasing deductions. That's backward thinking. A tax deduction does not magically make unnecessary spending smart. The goal is always financial wisdom first. Sometimes the best use of your bonus is paying off debt. Sometimes it's building your emergency fund. Sometimes it's investing. Sometimes it's catching up financially after a hard season. And yes, sometimes it's okay to enjoy part of it responsibly too. The key is intentionality. That's what we teach inside the Power Team system. Give every dollar a purpose before emotions spend it for you. Now let's also clear up what counts as taxable bonuses because people assume bonuses only mean cash rewards. The IRS considers a lot of things supplemental income: commissions, severance pay, retroactive pay, certain incentives, prizes, back pay, some fringe benefits. All of that can potentially create tax consequences. But there are some smaller non-cash perks that usually aren't taxable the same way. Things like occasional meals, company parties, small gifts, or employee discounts are often treated differently. So no, your company pizza party probably isn't triggering an IRS investigation. You're safe. But the bigger lesson here is this: every dollar that enters your life should be handled with awareness, because most people get emotional with extra money. Bonuses hit the account and suddenly people start acting different. Luxury spending, impulse shopping, vacation planning, lifestyle inflation, instead of using the opportunity to strengthen their financial future. Inside the Power Team system, we teach people that extra income should create extra progress, not extra chaos. Because financial peace is built intentionally. And one of the fastest ways to stay trapped financially is increasing your lifestyle every time your income increases. That's why wealthy people often think differently than broke people. Broke people see bonuses as spending opportunities. Wealthy people see bonuses as strategic tools. Tools to eliminate debt, tools to invest, tools to build margin, tools to create long-term freedom. And listen, I'm not saying don't enjoy your hard work. Celebrate responsibly. You earned it. But make sure your bonus is building your future, not financing temporary excitement. Because temporary excitement fades quickly, but financial freedom lasts.